Have you ever spent time trying to understand your life insurance products or maybe your savings product because you gave up because it's opaque, inflexible and expensive? We make no judgments here on Tonight with Bruce Whitfield. Tonight, we look at whether products are aimed more at rewarding the salespeople, the company executives and the shareholders than offering value to consumers. Joining me, Walter van der Merwe, Chief Executive of FedGroup Life, and Warren Ingram, Executive Director at Galileo Capital. He's a financial advisor. How fair are insurance products, Warren Ingram?
Insurance products?
Yes.
In all honesty, I think some of them are fair. So pure life cover, not bad.
What's easy? You buy life cover, you die, there's a payment.
Provided you didn't kill yourself, provided this and that, but most of the provisions I think are fair. So I think that those are not bad. I think it gets a bit more complex around disability and the dread diseases. To me, very often the wording of those agreements are more weighted to the insurance company than especially unsophisticated person who doesn't really know all the bits and pieces that come with it. I mean, I've studied this stuff and I don't always understand even a quote.
Absolutely right. Walter, I mean, is your industry changing quickly enough?
Industry is changing, but not quickly enough. And I mean, I agree on the disability products, even life products. Out there, they're now competing on price. That's not a good practice.
Why is it not a good practice to compete on price? You're dead, you get paid out. Boom, simple.
There are terms and conditions that differentiate product. So you can't just look at price. You have to make sure that you fully understand that product to make sure when it will pay and when it will not pay.
Okay, so those are terms and conditions within the policies. Are those terms and conditions written in what the National Treasury is trying to have South African financial services companies do, and that is treat customers fairly?
There has been a big change. It has moved towards that. There's still more to be done. So it's not legalese anymore. It's actually terms and conditions that you can read, and a reasonable person can understand those terms and conditions.
So a reasonable person. Warren might understand. Warren might understand the products, because these things have been, for decades, designed as if, and a cynic's view would be, deliberately to obfuscate, confuse, and have a get-out clause for the financial sector. Fair comment?
Fair comment, absolutely. I mean, we want to know what we've bought. That's fair. For any consumer, whether it's buying financial product or any other product, you're entitled to know what you're paying for.
How good is your documentation at FedGroup?
It is very good. I've written it in terms of questions and answers, so anyone can then read that question, which is a typical question that you would have, and get an answer that will answer that question.
If I'm buying a severe illness cover, for example, how many pages of documents do I need to wade through?
It's about 2 pages, and then because our product is defined on medical terms, it also includes the medical terms, so we're not expecting you to understand the medical terms, but again, anyone with an understanding of that will be able to determine whether you will get a payment or not get a payment.
Which is where the brokers come in, which is where the advisors come in, Warren Ingram. Quite often, in my experience, they're not as au fait with the products as they should be.
Quite right. I mean, I think this is an industry I've been in for nearly 20 years, and I still won't feel comfortable to talk about that side of the industry, because I mean, as an advisor, I think you carry enormous risk because of the complexity and the length of these documents. I mean, I think it takes quite a few years of study and experience before you can actually let someone loose as an advisor. And what's frightening to me is that some of these agents will be let loose after a few weeks of study.
Yeah, and that's it. So is it better to buy a product through an independent who might, in fairness, look at maybe 2, 3 investment houses, 4 at a push, or just go direct to the tied agent and take your chances?
So, I mean, obviously I'm an independent, so I guess that you have to understand the bias. I think from one point of view, if you're just looking for life cover, and you know that you're dealing with an agent who's worked for one company for many years, the one thing you do know about that agent is hopefully they're experienced and they understand all the nuances of that company's product. And if you just want simple life cover, that might actually be better, which is probably not the answer you thought I'd give. But
but I get it, I understand it, and that's a very generous and giving answer. It's better than the one I expected.
But what I would have said is you would still need to then shop around to 2 or 3, I think 3 agents at least then to get that view. And if you're going to go to an independent, which in this instance I think often might be your better route, because as you said, they can shop around. What you need to know is, has the independent got the experience in those companies with those products, and is it a reasonable time frame, at least 3 or 4 years of experience?
Walter, why is there nuance in product? Surely there is black, there is white. There should be no grey. Why is there grey?
Product providers try and differentiate themselves. So they come up with innovative ways.
So they create the complexity,
They
unnecessary
create the complexity. It's one of my big frustrations in our industry. It makes it impossible, firstly, for advisors to properly advise their clients because they need to understand fully what those nuances are. And then for consumers.
But that's, again, done deliberately.
Correct.
So to prevent comparison.
Correct. Absolutely. I fully agree with that. And for me, that practice is unacceptable.
But is it within the spirit or the letter of the law in terms of treating customers fairly? Because the moment Treasury says to a financial services provider, you may not offer incentives or benefits or cash back or points or miles or everlasting life or whatever the promise comes on a death benefit, the moment Treasury steps into that space, then it's forcing everybody to be uncompetitive because suddenly we get a vanilla product that is across all markets. There's got to be a level of ingenuity, surely.
I agree with the ingenuity as long as it's in the best interest of the consumer. And I believe there's certain practices out there that's not in the best interest of the consumer.
How do we tell what is in our best interests and not?
A very simple question. Do I understand what I've bought? In other words, if it's so
But it's
complex,
got bells and whistles. I love the bells and whistles.
That's been done because it makes it nice to sell the product. We're all trying to sell product and get consumers to choose our product over other people's product. And I mean, that's where Treasury for me must come in and say, this practice is not in the best interest of the consumer. They are, dare I say, being misled. They are buying something which is not free, because there is no such thing as a free product. You're paying for it, and you don't understand it. You don't know what you get. You don't know when it's going to pay your claims. I mean, look at the complaints that come through. Only when you claim do you fully realize what this product is paying for and what it's not paying for. So it's the wrong type of ingenuity. There must be ingenuity around product to improve them, to meet consumers' needs. I'm saying those bells and whistles aren't necessarily meeting your needs. They're serving the product provider.
They're serving
make
the
more
salesman.
money.
They're serving the salesman who finds it easier, Warren, to move product.
I think, I mean, one of the answers to your question about how do you know whether you're being well advised, to me, one of the things that has to change, and I can't believe it's difficult to do, is the way that the advisors are paid to sell those products. So this whole practice of paying pure upfront money to an agent or an independent to sell you life cover is wrong. To me, that should be exactly the same as the short-term insurance industry, where you get paid a fee per month, which is a fair fee, which is a regulated fee, and you are there to service that client and look after that client for a long period of time. I mean, you're buying life cover for potentially 20 or 40 years, and you can't just be sold something once and never seen again. And to me, I think that would change the game quite a bit, because those advisors would go from being salesmen to real advisors. Their job is to look after you, make sure you understand, and keep you.
But in the game of the call center and the game of chasing volume, and we look at new business flows, you look at all the results across Discovery, across Sanlam, Old Mutual, MMI, Liberty, all of these guys are recording massive levels of new business. They don't have time to advise, they're too busy selling.
So what's interesting about that is they had the same attitude to the investment side of the industry if we go back 50 years ago, and they got decimated by the unit trust industry. And that's what will happen. But
where is the competition then coming for these guys? Is there competition in the wings?
I think so. I mean, I think there are some new, obviously because they're new, smaller operators who are coming in and saying, you know, there must be a different way of doing this, and let's find ways for you to pay for insurance that you actually need and that you understand. And I think that's where it is going to come from. And what's so interesting about this is that they'll make a dent in the market, and then you'll see the behemoths of the industry
buy them out,
either buying them out or launching their own version, stealing the product idea and going and giving a different color, and they're on their way again. So they will adapt, but I do think that in this instance, regulation is good. I mean, it's crazy to me that we have to have a regulator to tell you to treat your customers fairly.
But this isn't a South African phenomenon. We've got to be clear on this. I think the UK is more advanced in terms of treat customers fairly. I think that's where the idea of this legislation comes from. The mere fact that we've got the legislation suggests the industry has not been treating its customers fairly. How do we trust it? Why should we trust you, Walter? You're chief executive of one of the behemoths. His words, not mine.
What you're saying there is absolutely true. And I mean, I like the way that it's being put that the small and new players can change the industry. For us, it's easier to move. We can change. We don't have that big legacy of the message that's been put out there by the big corporates.
But does it add to transparency? Or because now you've got to re-innovate and reinvent the wheel to sex up the products, to get the attention required to get the sales volumes through, you've got to add a new level and a new texture of mystery, don't you?
What's great for us is the fact that we can apply simplicity and transparency. We all as consumers want to know what we've bought. I mean, I've said that before. And the transparency around fees. What am I paying for this? What is it costing? Yes, I'm happy to pay a fee because I'm getting a service for it. So we can be innovative from that point of view. And yes, possibly we'll be copied, which is a good thing because that'll change the industry. And that's what we're about.
Okay, is it enough and is it fast enough, Warren Ingram?
I think Treasury actually are doing enough. I'm really sad to see COSATU interfering with some of Treasury's plans about this, but I do think
I mean, that's particularly to do with pensions, and that's particularly to do with long-term savings, which is another debate altogether. And this is about making pensions compulsory and also bringing in a level of preservation as well.
And I think that's the issue here, is as long as there is good intent behind a lot of this regulation, and people shouldn't be afraid of it as the consumer. I think most of this that I've seen is driven for the consumer's benefit, and it actually will make the industry better.
Okay, so how do we know what we're buying is, one, right for us, two, fair?
Ask the right questions.
What are the right questions? 3 right questions to ask.
What is it costing me?
How do I know whether that's fair or not? Yeah, that's the problem with this too.
Correct. I mean, for me, that's where the independent advisor comes in to compare it for you, to show you clearly what it's costing you. The other question,
including their fees.
Including their fees. Yeah. What am I getting out of this? And using real life examples. If this happens, what will the policy do? What will it pay? I mean,
but there's a broker now interpreting a company document.
Sure.
And so now we're getting an interpretation of an opaque document. And it's not necessarily what will occur on the day. And it all goes down to Warren's point about experience, getting somebody who's actually dealt with 13 lung collapses or whatever the case might be.
Sure.
If your lung collapses, this is the extent of your disability payout.
I mean, the purpose of any insurance product is to pay claims.
Yes.
That's its function. So if you cannot take that document and apply it to real life examples, you know it hasn't passed the test. So taking real life examples and comparing different product providers, different policies, and saying what happens in this instance, let's apply the same scenario to the next one, to the next one.
How do new players then break into that market? If that's what we're doing, we're testing history of a claims process. Well, you've got a new player who's a year old. It may be brilliant, but there's no history there.
Again, I mean, it's real cases that you can apply. There's examples in our industry of claims that you can take, apply to your policy document, and then you can see what it's going to pay and what it's not going to pay.
So bottom line, if you don't understand it, don't buy it.
Correct.
There we
Absolutely.
go. At that point, we will leave it. Walter van der Merwe, Chief Executive of FedGroup Life, Warren Ingram, the Executive Director and Independent Financial Advisor at Galileo Capital. Thanks for watching. There'll be more tonight, tomorrow. Till then, good night and goodbye.